Hey, how's it going? So today I'm going to talk about something very important. Today I'm talking about exactly what is options trading and giving you the full in-depth guide. So at the end of this video, you're going to know exactly what options trading is, what you need to do for your account size and what money you're trying to trade with or multiply, and exactly how to be a pro at options. Now, disclaimer, I'm going to show you in this video exactly what you need to become profitable and actionable. What does that mean? I'm going to be skipping a lot of fluff. I'm going to be skipping a lot of things that makes you seem like you're smart, but actually has nothing to do with the actual execution of a trade. It's like teaching somebody how to play basketball. Yes, I can tell you about where the ball came from and the history of the game and things of that nature. We're going to skip all that. We're going to go straight into here's how you bounce the ball. Here's how you shoot free throws. Here's how you hit the 3-pointer. Here's how you become Steph Curry. So let's get into it. What is actual options trading? What you need to understand about options trading is that it's about one key word, and that is the word leverage. So write that down, leverage. And what do I mean by leverage? A lot of us are familiar with leverage in a lot of other industries, but when it comes to the actual stock market, we're not familiar with leverage. I give an example. In real estate, leverage is when you put 3.5% down on a property and you get to control 100% of that property. So I remember my very first house, it was 280,000, I think. I put down 3.5%, so that was about 10,000 and with close calls. But with $10,000, I was able to control almost $300,000 in assets. So we're familiar with it in real estate, but we're not really familiar with it in the stock market. Options is the down payment, is the FHA, is a conventional mortgage for the stock market. So if you wanted to control $100,000 worth of shares, you no longer have to put $100,000 down. You can actually go and actually buy and control 100,000 worth of shares for literally only $1,000. Now, this might seem far-fetched, but this is actually the truth. The thing about it is that when our mind is not familiar with something, we think it's risky or the word risk to it. And I want to tell you something right now that the word risk really just means running into situations knowledgeless. If you don't have knowledge of something, then for you, that thing is risky. So what you need to understand is that number one definition, options is the down payment, or for lack of a better term, options is the mortgage, the 30, 40-year mortgage on the stock market versus real estate. And because of that, options have four components you need to worry about. Number one, just like you sign a mortgage contract, there's also an options contract. And here's the details of the options contract. Number one, each contract controls 100 shares. So if you buy one one options contract, you're controlling 100 shares of whatever that company is. So for example, if you buy one options contract of Facebook, Meta, you're controlling 100 real shares of Meta. Number two, you understand is that with options, there's an expiration date. Just like your mortgage has a 30-year expiration date, every options contract, because of its leverage, also has an expiration date. Here's the difference. You can pick the expiration date. So I'm going to show you an example of an options chain that shows different expiration dates. So if you go into, let's just say Apple options chain, and you click it, it's going to show you all of the options chain in Apple. So if I go to Yahoo Finance, it's going to show me all of the options chain in Apple. And then it does it by dates. So if you look here, it says right now, July 18, 2025. There's the one of the video. This is July 11th. You can actually click the drop down button, and then there will be several options of dates available to you based on what you actually want to trade. So if I click this right now, you can see below that is showing all different type of dates all the way to 2027. So just like you can hold real estate for 30 years, with options contract, usually they're held up to 2 years. They're 2 years contracts at the max. So now that you understand that, how can we actually use it for leverage? Great. Well, with the expiration date, there's also something called a strike price. Now, the reason why the strike price is important is that this is going to determine 80% of your options trading. The strike price pretty much says that this is the price that I want to make the contract for. And if you think that the market is going to go up or the effect is going to go up, you pick a price lower. If you think the stock is going to go up or the market is going to go up, you pick a strike price or a price higher than where it is right now. If you think the stock price is going to go down, you pick a strike price lower than when the price is right now. So for example, if Apple is 140 and I think that Apple is going to get to 180, I'm going to buy something called a call at a strike price of 180 because that's what I think it's going to get. And as the market goes up to that strike price, I make more and more money. If I think Apple's going to go down, let's say Apple right now is at 140. If I think Apple's going to go down, I'm going to buy something called puts to, let's say, strike price 100. And as Apple gets more and more closer to 100, the more money I make. So that being said, that I expose two other key terms you need to know in this. Number one is calls. You buy calls when you think the market is going to go up. And then the second word is puts. You buy puts when you think the market is going to go down. If you know these two things, you're going to be a very proficient options trader. Why? Because most of your trades, no matter how advanced you get, starts with either a call or a put. And one thing I want you to understand is that options is a very diverse world. There's a lot of things in there. I was in nursing school, and I remember there was nursing 101, the foundations of nursing. And then there was nursing 102, anatomy and physiology. There was nursing 103, the heart and heart systems. There was nursing 404, of the brain and brain systems. If I just said, oh, nursing is the foundations of nursing, I will be totally wrong. Even though I have the foundation and the basics of nursing down, the more skilled I get in nursing, the more education I get, the more effective I would be in being a nurse. And the more education you get in options trading, the more effective you will be in being an options trader. Guys, I promise you this. Listen to me very closely. Come closer. This skill of options trading can literally be all you need to change your life for the rest of your life. How do I know that? I am living proof of this because a lot of people talk about options trading as one particular thing, but there's a whole world of it. And I'm going to focus on two of them in this video. The first version I'll share, I'm going to focus on is being a buyer. So you're going to buy calls and puts depending on whether you think the market's going to go up or whether you think the market's going to go down. This is called directional trading. Now, I literally developed the strategy on this opportunity for the last 8 years very profitably with over 80% win rate. I'm going to link that video right here about how I make $30,000 a month following this strategy. But there's another strategy where you're a seller of calls and puts and not just the buyer. Now, I want you guys to think, I don't know whether you've ever heard the saying before, that for you to be successful in society, you don't want to be a buyer, you don't want to be a consumer, you want to be a producer. In options, the most advanced people are not only buyers of options, most of them are sellers of options. So not only can you buy calls and puts, you can also sell calls and puts, which is a crazy game changer. And I'm going to get to that in a second. I want you to change your mind on how you actually think about options trading, because I'm giving you a full in-depth course on this, literally full course of options trading from beginning to end. Okay, so if you stick through this with me, you will literally learn the secrets to trading options. So we talked about the contract. We talked about it has 100 shares per contract. Talked about the expiration. We talked about the strike. And then the final thing you need to choose is whether you're buying calls or puts, depending on whether you think the market is going to go up or down. Now, I developed a trend line trading system that literally shows me, hey, is it time to get into calls, it's time to get into puts, and I make money that way, all fine and dandy. What I really want to focus this video about and talk about more often is the other side of options trading. I said that in nursing, there's different levels. With options, there's different levels as well. So for example, level 1 with options is buying calls and puts. And you can make money with this. You can day trade this. You can swing trade this, all of the above. Okay, that's level 1. Level 2 You can buy a call and buy a put all at the same time. Level number 3, you can sell a call and sell a put. Level number 4, you can buy a call, buy a put, sell a call, sell a put. And I'm just describing different ways you can actually build on your skills and expertise for options based on what you're trying to do. And they all have different names. So for example, in the options world, there's buying calls and buying puts. They call those naked options. That's level number 1. And literally in options trading, if you understand it, options trading can literally be a business on its own. So for example, there's level number 2, which is called verticals or spreads. A vertical or a spread is literally like becoming an insurance company. And we all know, according to Warren Buffett, insurance companies are one of the most profitable companies in the United States. And so you can literally become your own insurance company. I've heard about be your own bank. That's all cool. But with options, you can actually not only be your own bank, you can be the insurance agency too. So you can actually be your bank with options trading, buy insurance, do the market on yourself, and then produce monthly cash flow from it. There's verticals. Then there's 3. Okay, and verticals are also called spreads, by the way. And like you're spreading butter on toast. And there's level number 3, which is the iron condor. And the iron condor is the use of 2 verticals or 2 spreads at the same time. And all these techniques are used for 3 purposes. Number 1, to generate cash flow. Number 2, to multiply money as fast as possible. And number 3, to protect your downside on the position. So now that you kind of have an understanding of how big the options trading work can actually get, as a beginner, how can you actually use this to make money? So I'm going to give you an example based off 3 account balances: a $10,000 account, a $100,000 account, and a $500,000 account. And if you pay attention to this part of the video, literally your life will change forever. So let's start with the $10,000 account. So I'm going to go to the 100K account. I'm going to go to the $500,000 account. Believe it or not, if you're in the 100K to 500K bucket, you can actually retire off of options. And I'm going to show you how in a second. If we have a 10K account, this is exactly what I'll do. I will use 10% of my account to buy naked calls and puts. I'll just call them naked calls and puts, NCP. Why would I use that? Or why would I do that? Why? Because with the simple trend trading strategy I have, anybody with a $10,000 account or less, what you need to do is learn how to multiply money. That is the name of your game. You need to learn how to multiply money as quickly as possible with as little risk as possible. So what I would do is do the trend line trading strategy. I'm going to put a link to that video in the description below, just in case it doesn't pop up here. You need to focus and study that like it's your Bible. So what I do is I teach you guys exactly how to take 1K, put it in the market, and really let it become your own personal no risk lottery ticket. I've turned $800 into $5,000 in 1 week. I've turned $300 into $30,000 in a month and a half. That's the type of results you get with this. So what you want to do is you want to use that method until you get to a place where you have somewhere between 30K to 100K. And then from 30K to 100K, you transition from a buyer to a seller. What do I mean by that? Well, you can actually sell options to get into trades. So for example, if I wanted to buy Apple, and Apple right now is $140 a share in the example below. But let's say I love Apple as a company and I want to buy Apple at $100 a share. Great question. I can sell a put order, and this is called cash secured puts. This is the name of the technique. It's called cash secured puts. And if you want me to do a full video on this, just how below cash secured puts, now I'll do a full video on this so you guys can see it step by step. Okay. And I literally did this, my very first trade doing this. I made like $1,100 in 2 minutes. And it's not day trading, by the way. So with Apple, let's say Apple's at 140, I want to buy it at 100. I'm then going to sell a cash secured put, 1 contract, and they're going to pay me a premium on that, usually 5%, 3 to 5% on whatever money I put in. So let's say I put in $100,000 into this. I'm going to make 5% of that, 35%, which is 3,500, give or take, just replacing the trade. And what happens, that 3,500 immediately gets put into my account and it becomes realized profit for me. Because now we're not buying options, naked calls and puts. We're selling options through cash secured put. So when we sold that option, they're going to give us $3,500. And here's a caveat. If Apple does not get to $100 within those 30 days, you get to keep the money. So this is literally the rental income of the stock market. You're literally you're selling puts, you're selling options to generate daily cash flow. Now, I want you to think about your bills. Most people in America that I speak to, their bills are under $6,000. That means that if you get $200,000 in cash, you can be making anywhere from 7K to 10K every single month in cash flow. That means that money gets into your account immediately. And in 30 days, as long as the stock doesn't get to 100, you're going to make that money. You're going to get to keep that money as premium. So now you're starting to see, as a trader, I want you to start thinking. If you start mixing and matching, you're doing a little bit of this where you're multiplying your money, but you're using a large amount of your capital to get into very safe plays and generate monthly cash flow. That's what's called cash secured puts. Now I know your next question. I'll show you a perfect example here. Let's go to Apple. Now, Apple is $209 per share. These are calls. I'm going to show you the cash secured put side. Because when you're selling, we want to sell those puts. So in this example right now, Apple is 200. Let's say in the next, right now Apple is 210. Let's say in the next 30 days, so we have to change the expiration. So let's just give it 30 days, give or take. Let's say in Apple day, the 30 days, we're saying, hey, in the next 30 days, I don't believe Apple is going to get to 250. Or we can even make it safer. We can say, hey, in the next 90 days, I don't think Apple is going to drop to 250. This is the calls. You want to scroll down to the puts. I said 250. I'm sorry, 150. So that means that for this trade, you're going to get paid $107 per share for the 150 strike price. So to buy one of these contracts, you need $15,000 to buy one of these. So if you have 200,000, you can buy about 13 of these, which means that you're going to clearly get paid about $1,300 in cash immediately to execute this trade. And Apple's one of the bigger companies, which is why they pay you less premium. But for example, let's say you go to a company, one of the companies I love doing this with is PLTR. And I actually took this exact trade. And let's say in the same time frame, PLTR right now is 147. But let's say, hey, we don't think it's going to get to regarding the options chain. My Yahoo Finance has been a little bit slow. Let me type in options chain and it's going to pop up. Let's say, again, we're going to change the expiration. Before I change the expiration, I'm just going to do it as if we're doing it for a week. And if you want to generate weekly cash flow, because I want this video to go a little bit faster and smoother. Let's say in a week, we're saying, hey, in a week, we don't think PLTR is going to go from 148 to 140. And in a week, this is, PLTR doesn't move this far. So 141, again, $110 to buy this. And you can buy 20, 30, 40, 50, depending on how much cash you have, and generate those $2,000 to $5,000 a month. So that's pretty much how it works. But there's specific companies that give you the best cash for your return, and they're safe. PLTR used to be great for this when it was around $85, $90, but now that it's kind of shut up, there's other tickers that we use SoFi is a decent one. You can use for this as well. But the point is you're selling options to generate cash flow. Now, I know your question, Josh, what if within those 30 days it hits that level? Great. Then you do the other side of the strategy called covered calls. And the total strategy is called the will strategy. And what that means is that let's say you get assigned those Apple shares at 100. The next 30 days, you do the reverse order. Now you're selling calls. So to get into the trade, you're selling puts. If you get the shares, you're selling calls. Here's the beauty. Once you own the shares, you actually get paid more premium, more cash upfront to sell the calls than to actually sell the puts. So what does that mean? Literally, instead of the 3%, you would definitely get around that 4 to 5% when you're selling calls. So if you have $100,000, you're going to make about $4,500 selling calls every month for those 30 days. What if it gets to what the 140 in those 30 days? Great. You sell your shares that you bought at 100 for 140. And not only do you sell your shares, you get to keep the premium. So let's do the math. Let's say you bought one contract. Let's say you bought $100,000 worth of contracts. Let's just say it's 10. Those 10 contracts represent 100 shares each. So 10 times 100 is 1,000 shares. Your 1,000 shares just went up $40. What's 1,000 times 40? Really, what's 1,000 times 40? 1,000 times 40 is 40,000. So you made $40,000 on the shares, and then you made $4,500 for selling the call. So now in total, you just made $44,500 in 1 month during this strategy. Now, you might think this is made up, but Warren Buffett actually did this. Literally, you can Google Warren Buffett got paid how much in March to sell options on Coca-Cola. Because what happens is that in 1970, Warren Buffett got actually paid $7.5 million for selling put options for shares of Coca-Cola that have made him over $1 billion to date. So he got paid $7.5 million because he was a seller of the put options. Remember I told you about the cash puts? That's exactly what he did here. Now imagine you had $500,000 in cash in your 401k or your retirement. Now let's do the math. You're making 3 to 5% on your money every single month. So 5% of 500,000 is 25K a month following this exact strategy. If you guys want me to do a video more on how to actually execute this, you can jump comment below and I'll do that. But here's the thing I want you to really understand. Once you start getting to 100 to 500K mark, not only do you want to be doing the will strategy, that's great, and doing cash secured puts and covered calls, and being a seller, you also want to be giving yourself lottery tickets. What do I mean by that? Dedicate at least 10% of your account to be doing these trades where you're doing these 10-minute trades, where you put $10,000 in and literally in 30 days, that $10,000 turned to $50,000. This is really the best lottery ticket to buy. Why? Because it's not gambling. It's based on history. There's really a mathematical setup that we're using that's been backtested and proven. And also you can do it over and over again. You don't have to be guessing and hoping that you're going to be the one out of a billion. If you follow these strategies as an options trader, either you're selling cash secured puts, you're selling covered calls, you're also doing verticals, which I can get another video, that's a whole nother world. Okay, we're talking about verticals and adding condors. But if you just stick to these 3 basic things, which is naked calls and puts, and using a 10-minute trade, not just any old way, the way I teach it. Number 2, cash secured puts. Number 3, covered calls. This is really options trading 101. There's other things like straggles, diamonds, butterflies. I can go deep, like you can really get advanced with it. But as far as you making money, these are the 3 things that I will start studying from jump. I have literally perfected when I say perfected and nailed how to grow a $10,000 account using 10-minute trades. So if that's where you're starting, there's a link below. I'll love for you to check that out. But if you're now an investor but where you're doing $100,000, $200,000, $500,000 in monthly, you're trying to generate monthly cash flow from it, go ahead and sign up for my email list. This is a masterclass where I teach these strategies very specifically, and I go over them step by step. So every questions are always drop them below. I know when those were a lot, but learning the options game can really transform your life, and I hope you get started. Chat soon.